Personal finance has taken center stage for Filipinos navigating economic shifts with inflation, investment trends, and digital financial services creating opportunities and challenges. Today we discuss strategies for wealth growth and protection with special insights into the habits of the ultra-rich. Efren Cruz is the chairman and CEO of Personal Finance Advisors Philippines Corporation, a pioneer in financial literacy advocacy in the Philippines. He's known for his Yaman coaching programs, and he brings decades of expertise in helping Filipinos achieve financial freedom. Efren, good to have you and welcome to Follow the Money.
Thank you for having me.
Your company, Personal Finance Advisors, is highly regarded for its enriched programs and financial literacy efforts. Can you kindly share your company's philosophy and how it's impacting financial planning in 2024?
Well, our vision is really to see Filipinos empowered in personal finance, no? Not just here in the Philippines, but Filipinos abroad. No? And then since 2006, we have been helping mostly employees of companies not just focus on money when it comes to their workplace. No, so they have to actually be focused on their work, and to do that, we take the money concerns out of the way by training them how to really manage their money well.
That's good to hear. But lately, with GCash and other fintech apps becoming integral to daily transactions, fraud and hacking cases have increased, and perhaps even making expenses have also accelerated. What steps do you recommend to users to ensure that they are protected?
Well, if you're using these online apps, no, digital banks and all, to do your banking, no, and if you're not that comfortable, why not just use them for transaction purposes and then leave the bulk of your money in the traditional banks where you have a passbook or a savings account or checking account. What I do is that I really just use it for transactions. So my balance in GCash was 000. So I didn't have to worry that the money was being siphoned off GCash accounts. So, but they were returned eventually anyway.
Mm-hmm. Right. So is there a particular amount that maybe is safe enough that we can afford to lose? Perhaps, we wouldn't panic about in general day-to-day life?
Maybe less than 1,000 if you want to keep them. Because, for example, you do have some transactions that actually debit GCash, like your streaming services, no? So, maybe less than 1,000 should be okay.
All right. Well, globally, ultra-high net worth individuals often focus on diversified portfolios. Where do the Philippines wealthy park their money for growth, and have these trends changed in 2024?
The ultra-rich actually just keep it mostly in their businesses, okay, and they reinvest it there. Those who are not the ultra-rich, but let's say, the professionals who are earning a lot, like doctors and lawyers, no, they actually have a very little clue on where to put their money, especially the doctors. That's why the advisors come. This is where they come into the picture, no? So the advisors will tell them, well, this is where you could put it or there. But mostly because these doctors would have achieved success already, they're not really after the high risk. So the advice is to really more of take away some off the table and put it in safe instruments so that they have something for retirement.
Talk about investments and instruments. A study noted that the Philippine Stock Exchange often outpaces inflation, yet fund managers underperform the market. Why do you think this might be the case, and what advice do you have for individual investors? That means I put my money with them, I park their money with them, but they actually give me negative returns.
Well, the alternative is for these individuals to actually invest in the stock market themselves. But it's not that easy. No. Firstly, the stock index on which they're compared does not have any transaction costs. That's why, by default, fund managers will really underperform the index. No? Plus, they don't want to be too risky with people's money. If you have a client, like we do have clients who are really risk takers, we actually have outperformed the index. But for the majority of investors, they're really not that open to risks. That's why these fund managers take very good care of managing other people's money. I wouldn't recommend people who are lay people to just go in and invest in the stock market. They will probably lose more that way.
Mm-hmm. Well, what about cryptocurrency? There is a bull run happening now, and fixed income securities, though, offer stability. How do you view these options versus traditional stores of value, like gold for 2024 investors, or even traditional bank accounts?
Well, cryptocurrency, well, coming from a value investor, to me, there's really not that much value behind cryptocurrency. That's why I don't really recommend it to my clients. As of this time, it's really mostly speculation. And I wouldn't want to put my clients' money there, knowing that anytime it can change direction without a rhyme or reason.
All right, still on investments, you have properties. Do you ever encounter any property distress? What would be your advice for managing assets effectively during tough times?
Okay. People have to realize that if they put money in property, as well as stocks, it's like putting money in bonds. No? So if you put money in property, there are two ways to make money: the appreciation of the property value, and also if you rent it out. Okay. So if you probably bought a condo and you're renting it out as Airbnb, but the prices have not gone up that much, or maybe even gone down, don't worry, because you still have income coming. For as long as you hold it up for a long period of time, you will have income coming, and maybe you can time it in such a way that you sell it eventually when the market is good.
All right. With economic pressures mounting, some property owners face distress. Are there steps you would recommend to clients to prevent or manage such situations effectively? Right now, we have a lot of properties that are not moving, or people are not able to sell, or are not appreciating as fast as they wish.
Well, it's very hard to move the market itself now. So I would advise them to just be patient, hold on to what they have, maybe do a little bit of improvement if they can to make it more attractive. Rent it out first. Don't go for the big bucks of flipping it right away. No, make the most out of it. If it's not being occupied, get it occupied. That's a better solution. No, don't panic. Good times will come.
You have a column, a delightful column, with one broadsheet. Reports highlight that aggressive debt collection practices in the Philippines is one of the topics that you actually discussed. Is there advice that you would give to individuals overwhelmed by debt to regain control of their finances?
Well, we do have a program called Enrich Good. It's free. Good stands for getting out of debt. And the basic strategy is to really tell your collectors, if you are in trouble with your cash flow, just be honest, be sincere with them, and tell them you can't really make the payments. No, you can actually negotiate. Now, they will, of course, say no right away. Okay. Just be patient and be persistent and keep on sending those letters, letters that actually are sent by courier, because those letters that are physical letters, no, they will serve as your evidence that you're not running away, and that will help you later on if ever they file a case against you. But with all of the people we've helped, most of them got actually big discounts, at least 50% from their creditors when they're really past due already.
On another topic, the PERA Act remains underutilized, yet it could be a game changer for retirement savings. How do you propose making this and other retirement options more accessible?
Well, the thing with PERA is that people don't know about it. I keep on talking about it in our seminars with employees. It's like they're so wide-eyed. It's like it's the first time they've heard of it. So there really needs to be more of education of the public on how PERA can actually benefit them. One of the biggest is really the tax credit, no? That you can get a tax credit for just contributing. Imagine just contributing towards your retirement. Wow, that's a big benefit. And of course, all of your investments will be tax exempt. So that should be a priority of the government. Keep people more interested or aware about what PERA is really.
All right, Efren, you've also mentioned in one of your columns that listening is key to advising clients. How do you address the emotional challenges that arise, such as sudden financial loss or the burden of wealth? If there's one timeless piece of advice you could give to Filipinos of all financial backgrounds, what would it be?
Oh, okay. Then just sit down with your spouse if you do have one. If not, just sit down by yourself. Just take stock of how you're really budgeting your money. No, and don't include debt first. Just take stock of what it is. No, we actually have a calculator. If they're interested, we can share it with them. We have reversed engineered the ITR. We can tell you with whatever lifestyle you have, as represented by your lifestyle cost, we can tell you how much you need to be earning to pay for that lifestyle. Now, if, for example, the resulting earning will be higher than what you are actually earning, then obviously you're living beyond your means. No? So then that's a signal for you to really just take stock and cut back on your discretionary expenses first. And if not, that's not enough. Even your fixed costs, you have to cut back on that. So just take a step back, do a deep dive on your budget, and see where the holes are in terms of your money flows.
All right, simple but authentic words of wisdom from a registered financial planner with years or decades of experience. Thanks to our guest, Efren Cruz, Chairman and CEO of Personal Finance Advisors Philippines Corporation. Grateful for you sharing your insights and wealth of experience. We appreciate it.
Thank you. Thank you.